If you are struggling to become a consistently profitable trader, use this strategy now. After this video, you will be able to become profitable instantly, find daily bias easily, know exactly where to put your stop loss and take profits at, and know where liquidity is resting at so you stop getting stopped out on every single trade. Our main strategy rules that we will be looking at is first, marking off London or Asia session high or low. So I've talked about this a lot of times. Mainly session-based liquidity is where price likes to go to during every single day. So this strategy's foundation is based off of liquidity. So we want to wait for and mark off both the London and Asia high and low. Next, we want to wait for a sweep of the session liquidity during the first hour of the session opening. London Open usually opens during 3 o'clock CST, and then New York Open normally opens at 8 o'clock CST. So you'd have to find what time London and New York open in your specific time frame. And we only want to be trading the first hour because during that first hour, we're going to get the most price movement, we're going to get the most volatility. So once we trade during that first hour, we wait for that sweep of that Asia high, or London high, or the low, depending on the direction that we are in. Next, we enter in on the market structure shift. So we just don't enter when there's a sweep. No, because that could be a trap as well. We want to enter when the market is showing signs that it is going to reverse. Lastly, we want to have at least a 1 to 2 risk to reward and move our stop loss to break even after a 1 to 1. So this strategy is more mechanical. So we just want to go for a simple 1 to 2. And then once our price moves in our favor to at least a 1 to 1, we move our stop loss to break even because we are scalpers and we want to take advantage of that push in price, and we don't want price to come back and then stop us out. We might as well protect our risk and move to break even. Now, before we get back to the video, I just want to say that I will be doing a giveaway inside of my free Discord. We'll be giving away a prize worth of $500 once we hit 1,000 members and 10 people inside of our VIP. To increase your odds, you have to be subscribed to our YouTube channel and leave a like and comment. Our free community, I do my trades and analysis. I give away free signals. You can ask me questions. We go over trading psychology. And if you need even more help, there is my VIP. And like I said, once we hit 10 members, we will be giving away that prize. So make sure to subscribe and also join the community. So this is how we're going to be entering on the Asian range sweep specifically. So the Asian range is usually a consolidation. Price barely moves during Asia because there is barely any volume. Because of that, there's liquidity, a lot of orders sitting around the highs and the lows that price likes to target every single day. So this is our example of our Asian range if we want to sell. Price is in consolidation, then London opens, and what do? We take out where? We take out the Asian range liquidity, which is right here. So this is the first hour of London open. We wait until the market structure shift. We get inside of this trade, and then we hold all the way down. Very, very, very simple. Now the same thing applies when we are trading the New York. So this is when for the people who trade New York session specifically, we want to see the same thing, but during London, we want to see more of a consolidation move. And then New York, we want to see manipulation of the highs. And then we see the reversal. If we are selling, we want to see this. If we are buying, it's the complete opposite, where we want to see the takeout of the lows. But since we are selling, we want to see price take out the highs. So here, price was in consolidation. We take out the highs, then we wait for that market structure shift again, and then we get inside this trade and we hold all the way down until price takes out this liquidity under these lows. All right, so here's an example on gold. I usually trade gold during New York, but we're gonna do London and then we'll do New York later. So in this example, we have this Asia inside of the black, and then we have London inside of the lighter yellow, and then we have New York starting inside of the yellow. So first, like our strategy says, we mark off both our Asia high and also our Asia low. Then during London, what do we see happen immediately after the open? During the first hour, we see that manipulation push. So after that, we go down to our lower time frames. Right now, I am on the 2-minute, and then we wait for the market structure shift. So all a market structure shift is when the market, basically a change of character. So this was the last low that the market created, right? Where did that low start from? It started from right here. So we have to wait until the market shows signs of breaking this area before getting inside of this trade. Once we break above that area, put our stop loss around here where the origin is at, and then we aim for a 1 to 2 risk to reward. And as you can see, price hits it very easily. So during that first hour, always make sure we first manipulate Asia inside of the direction that we want to go. Here's another example on gold for our Asia session sweep. So what we are looking at is first the consolidation of Asia. Asia was more so moving a little bit, but still in consolidation. The next thing we are looking for is a sweep of the low. Remember that if we swept the high, the whole thing would be invalid. We don't want to see a sweep of Asia high before we see a sweep of Asia low. We want to see price take out Asia low first, but like leave Asia high unmitigated, because we know liquidity is resting up at the highs. So after this, we see the manipulation of Asia, we go down to the lower time frames and we wait until the market structure shift. So this was the last low down. This is where the move started from, and now we wait for the break of that. Put our stop loss right there around 4 ticks, aiming for a 1 to 2, and we see that price literally flies towards it during New York. And for the full move went for a 1 to 4. And always remember, once we hit this 1 to 1 right here, which would be very easy, all we need was 4 ticks, we move our stop loss straight to break even, and then we let the rest of the move ride. So this is literally one of the easiest strategies, I'm telling you guys, one of the easiest strategies I wish that I had when I first started off in the market. An easy edge and a very simple hedge that you can execute on consistently. Here's another example on the next day, which was the 24th on gold. Gold literally did the same thing again, the same move. Let's mark off our Asia high and also mark off our Asia low. What do we see during the first hour? We see that manipulation once again of Asia low before taking out the highs. We hop down to our lower time frame. This was the last leg down. The move started from up here, so we wait for that change. Stop loss down around 7 ticks this time, and then we aim for a 1 to 2 risk to reward, and we ended up hitting it during New York. Why is this strategy so effective? It is because it's backed by liquidity and also how the market moves. Asia usually sets the low of the day. So when price tests Asia in London or New York, more than likely we are getting that retest of that low of the day, and that a lot of the times is the new low of the day or high of the day before price moves higher. So this strategy is backed by an actual causation effect inside of the markets. So anyways, we take out this low, like I said again, 1 for 2. Once we hit that 1 to 1, we are moving our stop loss to break even, and we are letting the rest of this trade ride. Now we have another example of this, but this is going to be our New York session, and we're looking for a sweep of London instead of looking for that sweep of Asia. Now we can get a sweep of both, and getting a sweep of both is very, very high probability, because when we take out both London and we take out Asia, that to me is a sign that we're definitely about to move higher or lower inside of a certain direction majority of the time. So during our New York session, we are trading during the first hour. So right here is 7 o'clock. This manipulation happens exactly at 7:30. We haven't taken out London high, but we take out London low. We manipulate and take out both London low and also Asia low. So after this point, we go to the lower time frames. I go to the 2-minute, and then we wait for that market structure shift. This was the last leg down. Get in right here. Stop loss right below this low, and we aim for a 1 to 2 risk to reward. Once we hit a 1 to 1, we move our stop loss to break even, and we see that price would have tapped us in right here inside of this area. Basically almost the next day, price would have got us. It was a very crazy strategy, and it's very crazy strategy also for runners as well. So this is the whole model. We have the sweep of London, and then we moved higher. Now this was another day. This is on USD MXN. We first mark off our London high and our London low. Next, what do we see again? We see the manipulation of that London low during the first hour of New York. This was kind of near 8:15ish, but it's still part of our system. We can still count this trade. Then we move down to the lower time frames. We wait for that market structure shift, which was right here. This was the last leg down. This is where the move started from, right here. Wait for that. Put our stop loss right below, and we aim for that 1-for-2 R&R. Price ends up hitting it really quickly. Move our stop loss to break even past a 1-to-1. And yeah, this model literally happens almost every single week, and it's very easy to start spotting and start taking trades on that you can actually freaking rely on. So that is it for this video, guys. If you liked this video, if you like this easy and simple effective strategy, tell me in the comments if you guys did and if you guys are going to use it inside of your own trading. That's it for this video, and I'll see you guys next time.